In the AI gold rush, the biggest profits don't always go to the miners. They go to the water sellers. In this frenzy, Nvidia, the company that defined computing power, is undoubtedly the one standing center stage. But as it became the iconic symbol of this global tech revolution, another company has been quietly rising behind it, emerging as the invisible winner. It doesn't build large language models, nor does it directly manufacture GPUs. It sells memory, a basic component that for decades has been viewed as a cyclical commodity, with prices that soar and crash and profits that fluctuate wildly. This company is SK Hynix, from South Korea. On May 27, 2026, when the Korean stock market opened, SK Hynix's share price surged relentlessly, at one point jumping nearly 15% intraday to a peak of $235,801. Its market capitalization broke through the $1 trillion mark for the first time, approximately 6.76 trillion yuan. It became the first memory chip company in Asia after Samsung Electronics, and the third in the world, to join the $1 trillion club. What is even more staggering is that just 1 year earlier, SK Hynix's stock price was only 20,301, roughly 898 yuan. A tenfold surge in a single year is enough to turn heads for any company. Beyond the stock price, SK Hynix made global headlines for the massive performance bonuses it handed out. According to Korean media reports, some teams received year-end bonuses equivalent to several times their annual salary, with the average bonus reaching over 600,000 yuan. A company that was once on the verge of bankruptcy and even classified as a non-performing asset by banks has now become the envy of the entire tech industry, a veritable money-printing machine. But reaching $1 trillion market cap and making waves with employee bonuses are just the tip of the iceberg. What is truly making global capital markets reassess SK Hynix is a high-stakes industrial gamble spanning 15 years, one that came close to failure multiple times. Memory prices are exploding, and Hynix has AI by the throat. On the surface, SK Hynix's breakout looks like a capital market euphoria. The stock multiplies tenfold in a year, the market cap hits $1 trillion, employee bonuses flood social media, and the Korean stock market boils over. Everything seems to have happened overnight. But in the semiconductor industry, nothing ever truly happens overnight. To understand why SK Hynix suddenly caught fire, you need to grasp a fundamental technical shift. Inside an AI server, the role of memory has been utterly transformed. For decades, memory was one of the least glamorous components in a computer. Consumers cared about CPU models and graphics card performance. A memory stick was just a standardized part you casually added at the end of a spec sheet. The industry competed on who was cheaper and who had more capacity, fighting round after round of price wars on razor-thin margins. But in the world of large AI models, the rules of the game have been completely shattered. Today's large language models easily have hundreds of billions, even trillions, of parameters. Every time a user interacts with an AI, the GPUs behind it must frantically pull data from memory. If the memory bandwidth cannot keep up, even the most powerful chips are left idle and waiting. Industry insiders have coined a vivid term for this bottleneck, the memory wall. If this wall doesn't come down, all the computing power in the world is useless. The tool to tear down this wall is HBM, or high bandwidth memory. Unlike ordinary memory sticks, where chips are laid flat on a motherboard and data has to travel a relatively long path to the processor, HBM stacks multiple layers of chips vertically like building blocks and connects them using microscopic vertical wires. This multiplies the number of data channels exponentially. And SK Hynix is precisely one of the most critical suppliers in this memory industry. IT commands over half of the global HBM market share. Nvidia, Google, and Amazon all line up to buy from it, and have even proactively offered to invest directly in its capacity expansion projects. According to data from TrendForce, in 2026, SK Hynix held roughly a 52% share of HBM shipments, Samsung Electronics held about 39%, and Micron held around 8%. Counterpoint Research predicts that once the next generation HBM4 enters mass production, SK Hynix will command 54% of the global market. In other words, more than half of the world's high-end AI accelerators need Hynix's memory to operate at full throttle. This near-monopolistic position is directly reflected in its financial numbers. In the first quarter of 2026, SK Hynix recorded a single quarter revenue of 52.58 trillion won, a 198% year-on-year increase. Its operating profit reached 37.61 trillion won, approximately 166.1 billion yuan, a 405% surge. Its net profit margin was a staggering 77%. For a direct comparison, in the first quarter of its fiscal year 2027, Nvidia's net profit margin was 71.48%. When it comes to pure profitability, this memory-selling company briefly outpaced the world's most powerful AI chip company. SK Hynix is not the only storage manufacturer tasting this windfall. This year, the entire memory sector has been boiling over. Micron Technology's stock price has similarly strengthened, and numerous companies across the supply chain have surged. The American memory giant Micron is also raking it in during this AI wave. Its 2026 HBM capacity has already been locked in advance by Nvidia, Amazon, Microsoft, and Google Cloud, and its stock has been rallying strongly this year. Capital markets are fundamentally re-evaluating the entire high-end memory sector. In the first quarter of 2026, Samsung Electronics Device Solutions division also saw both revenue and operating profit surge, with its memory business setting a quarterly sales record. Among the three storage titans, SK Hynix holds a uniquely positioned stance. Compared to Samsung and Micron, its business is heavily concentrated on high-bandwidth memory. HBM and its related high-end products contribute the absolute lion's share of its revenue, so when AI demand explodes, it is only natural that Hynix surges the most. 0.3 times on the brink of bankruptcy, only to ride the biggest wave. Yet, the fact that Hynix has become a pivotal player in the industry chain today is not just about luck. Looking back, this is a bet placed over 15 years. In 1983, Chung Ju-young, the founder of South Korea's Hyundai Group, overrode all objections and established Hyundai Electronics, focusing on memory chips. This company was the predecessor of SK Hynix. At the time, South Korea's semiconductor industry was virtually a blank slate, with Japanese and American firms holding an iron grip on technology and markets. Hyundai Electronics started from the most basic SRAM and DRAM, stepping directly into the global manufacturing battlefield. The memory chip industry has a brutal rule: players must constantly pour money into R&D and build new production lines, but as soon as new products hit the market, they can collide with a price collapse. Profit for 1 year and lose money for 3 is the norm. Without deep enough pockets, you can be swept away instantly by a single down cycle. Hyundai Electronics' first crisis came fast. In 1997, the Hyundai Group itself sank into a debt quagmire, and Hyundai Electronics struggled under a mountain of debt. It barely survived through debt restructuring and bank bailouts. In 1999, Hyundai Electronics acquired LG Semiconductor, completing a critical industrial consolidation before the wounds could heal. The second storm hit in 2001, global memory chip prices collapsed. The company, which had just spun off from Hyundai Group and renamed itself Hynix, was already insolvent on paper. Creditor banks had to step in again for a second round of large-scale debt restructuring. That year, although Hynix's share of the global DRAM market ranked at the top, financially it already had one foot in bankruptcy. After struggling for a few more years, Hynix was pushed to the brink again following the 2008 financial crisis. Its debt ratio spiked to dangerous levels. It was taken over by its banks and became a non-performing asset on the books. The banks searched everywhere for a buyer, but not a single major Korean company was willing to extend a hand. The reasoning was blunt. Memory is a bottomless money pit, and an invincible Samsung loomed right ahead. The turning point came in 2012. SK Group chairman Chae Tae-won decided to step in, acquiring a controlling stake in Hynix for about $3 billion. At the time, he made a statement: "I am not betting on Hynix, I am betting that information will become the oil of the next era." 2 weeks after the deal was signed, on February 27, 2012, Japanese DRAM giant Elpida filed for bankruptcy protection. The fall of the world's third-largest memory manufacturer instantly tightened supply. Memory prices bottomed out and rebounded, and SK Hynix swung back to profitability that same year. But what truly changed the company's destiny was a single chip in 2013. That year, SK Hynix released the world's first HBM memory based on through silicon via technology. Upon release, HBM could barely find a buyer. Application scenarios were scarce, costs were high, and yield ramp-up was slow. From a business perspective at the time, it truly seemed like more trouble than it was worth, but SK Hynix did not kill the product line. Instead, it kept iterating. The real explosion needed to wait for a sufficiently massive application. At the end of 2022, ChatGPT burst onto the scene, and global tech companies suddenly realized the power of large language models. The value of HBM was redefined. For instance, when Nvidia designs each new generation of platforms, it has no choice but to prioritize HBM specifications and supply, and on this track, SK Hynix, the earliest runner, naturally became the biggest beneficiary. 3 times near bankruptcy, 3 narrow escapes from death. Fate ultimately smiled on the player who managed to stay at the table. The water seller of the AI era starts raking in a silent fortune. Looking across the entire industry, an even bigger shift is unfolding. The AI industry is moving from a phase of competing on models to a phase of competing on infrastructure. In the first phase, the keyword was the large language model itself. Whoever could build the model with the most parameters held the narrative advantage. Entering the second phase, the keywords are shifting to data centers, chips, memory, and storage. The infrastructure. In a technical observation following Nvidia's GTC conference in 2026, SK Hynix made a judgment. The AI race is shifting from training the largest, smartest models to deploying large models at lower costs and pushing them into physical manufacturing and platform-based scenarios. Once inference is rolled out at scale, the demand for memory and computing power will become as essential as water and electricity. The ones footing the bill for this trend are the biggest new tech titans on the planet. Nvidia's latest earnings report on May 20, 2026, showed first quarter revenue hitting $81.6 billion, with data center revenue reaching $75.2 billion, a 92% year-on-year increase. Google, Amazon, and Microsoft have all previously announced AI infrastructure investment plans in the hundreds of billions of dollars. This money will ripple through the entire industry chain, flowing into every segment. Beyond SK Hynix, Micron Technology, and CXMT, TSMC is another classic water seller on this chain. GPUs require the most advanced manufacturing processes, and TSMC virtually monopolizes the high-end foundry business for global AI chips. TSMC's Q2 2025 earnings report explicitly stated that its business continues to be supported by AI and HPC-related demand. Looking downstream, the industrial chain segments ignited by AI are still spreading. For example, liquid cooling equipment, advanced packaging materials, and server power management chips. These niche sectors, once considered supporting roles or even outright ignored, are now being re-evaluated one by the capital markets. Broadcom, Delta Electronics, Hyundai, Wistron, Foxconn Industrial Internet, optical module manufacturers, and liquid cooling companies are all playing the role of water sellers in different positions. They may not be standing center stage, but they sell the infrastructure that the AI era cannot bypass. So, behind SK Hynix's tenfold share price surge in a single year lies no cliché story of a Korean chip company stumbling upon a lucky break. What it truly reflects is a redistribution of bargaining power across the AI industry. Things that are truly scarce will be repriced. However, the cyclical nature of memory chips has never disappeared. On June 5, after hitting a peak, SK Hynix's share price saw a sharp correction. The capital markets concerns are not unfounded. Expansion plans from Samsung and Micron are accelerating, and the HBM supply shortage could gradually narrow over the coming quarters. On a macro level, some Wall Street investment institutions have already started adjusting their positions on memory stocks. Fund managers have publicly stated that memory sector valuations are showing signs of overheating and that they are reducing their holdings. Meanwhile, the memory chip industry is highly susceptible to export controls, tariff adjustments, and shifts in industrial subsidy policies.